So in Shopify, so what we're looking at here is a 3-month chart, but even if I go back to a 6-month chart, Shopify just had their earnings. It's earnings season, by the way. A lot of companies are reporting, this week and next week. The banks have gone through their cycle. So when earnings goes past us, we have a good 3 months to do some sort of strategy on this. And so Shopify, it's been falling, 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 and then around in the beginning of May, it has found itself some legs. It's found a level of support. It's found a level of resistance. So again, if I zoom into just the last 3 months, it looks like it's trading between about $30.50 and about $41. That's a nice channel. And so when we sell premium, just to kind of outlay it, you know, you can sell premium all on the same day. That's called a buy right in the world of covered calls. That means that you buy the stock and then sell the premium on the same day. But that only gives you a certain, locked in return. In fact, when we analyze our trades, what we analyze, get this, everybody, we analyze a buy right done in the center of the channel. Why? Because that's the worst, shittiest trade that you can come up with, is a buy right in the center of a sideways moving channel. So if we analyze that and we understand what the minimum returns and the maximum risk is on that really crappy trade, then by simply buying a little lower and selling our premium and buying our protection a little bit higher, we can really put that trade onto turbocharging. And so I wanted to highlight Shopify SIP because this is in one of those patterns that's mature. It looks like, we're right in the center of the channel now. So if you guys would just take a look at analyzing what kind of max returns could I get and risk would I put on if I did a trade as of right now, and that would give you the baseline, right? We plan for the worst, and then we can only be surprised by better results. So it looks like we're heading back up towards a top. And so plan it out, see what this worst case scenario might be. And then my plan is to buy some back month put options. Once I see it back above this line, right, back above 35.75, more likely up here in the $40 range, I'm going to be thinking about, betting against Shopify. I'm going to go out to probably 2024. So I'm going to get some put options that are going to be around for a while. And I'm going to go somewhat deeper in the money so that these things act more and more like the stock, only in inverse, so that when the stock goes down $1, my back month put option will go up $1. I'm going to buy those things, and then I'm going to allow some time to go by. And once I dip down below my testing case, so probably in a couple weeks, once I'm back down here in the $32 range, that's when I'm going to go ahead and sell my put premium, buy my protective call, and just start this cash machine on Shopify. That's constantly putting ourselves on the correct side of the equation with this particular ticker. I foresee this particular ticker giving us income for months to come.